thanks, Anthony, again for your time. Very insightful and obviously kind of shows in the number of questions a fair amount of overlap and duplication as you would expect, so I'll moderate that as we go. Also, there's some pretty individualized questions, as has been the case in previous webinars, and again, after the presentation, between ourselves and the team at Zeridium, we'll try and deal with as many as we can. So, starting off here, Anthony, a lot of talk about, if I complete my tax immigration in this tax year, so in 2021, I apply and go through the relevant process. Does that mean that I no longer have to file a return in 2022? At what point do I stop filing a return to SARS?
Okay, excellent question. I touched on it, but it's worthy of a repetition. Okay, so if you, in your tax return, advise SARS that you're ceasing to be resident, in other words, when the wizard opens up and you indicate the date that you've ceased to be resident, that doesn't in itself absolve you from any obligation to submit tax returns in the future. You may be leaving assets behind in South Africa. There may be properties in which you're deriving rental income. So the fact that you are ceasing to be resident doesn't remove you off the register of taxpayers, because, as I say, you may need to be, there might be an RA, for example, or whatever. And so when can you safely come off the register is if you are no longer going to be in receipt of any taxable income. I would generally allow the dust to settle. You can always just submit nil returns, or if you believe that you are no longer liable to submit a return, then in your SARS filing profile, you simply don't request a return for the next year. So when 2022 comes along and you've really got nothing to tell SARS, SARS's records are up to date with your new country of residence and residential address and so on, then you simply don't request the return. And I think that you'll be okay. We've just got to watch, because SARS do sometimes charge administrative penalties for non-submission. But I think that if you've painstakingly advised them, as I believe the person who posed that question is intending to do, then you should be okay.
If I choose to financially immigrate and yet still have South African income producing assets, is it the right thing to do to financially immigrate? Where do I pay tax? Can I still earn income in South Africa?
So I think that one, and I've always said this in my many years as a practitioner, one shouldn't let the tax tail wag the dog. And what may well happen is once you've left and you have income producing assets in South Africa, is and your residence shifts to another country. And we did one of these seminars in March, and we had a lot of questions just around this very issue, is where am I tax resident and who do I have to account for? And recently I've come across people who believe, like I spoke about dual nationality, there is a belief that there's dual tax residence. And I don't believe that that exists. You're either tax resident in one country or the other. And particularly if that country has a treaty with South Africa, then that treaty overrides the domestic provisions and you will be possibly tax resident in the other country. So I think that your answer there, Darryl, is that you just need to follow the rules of the country that you're becoming a resident of. And if it's a country in the first world that taxes you on a worldwide income, then it depends. You either got to look at whether you pay tax on a source basis or on a residence basis, and whether you have to claim a credit for the tax paid in the other country, because the treaty will always come to your aid and give you the relief from double taxation. but it is a bit of an admin bind, and sometimes the tax years, the USA tax year runs January to December. South Africa runs March to February. So you get incomes that straddle different tax years, and it's complicated to work out your credits and so on. But I think the simple answer to your question is one would just need to look at the facts and the laws of the country that you're moving to, and the double tax treaty between that country and South Africa.
Thank you. What about financial immigration followed by a South African inheritance that gets earned? Are you able to get that overseas?
Absolutely. So, another very good question, and I thank the person posing these questions, because it shows a lot of the insight into what we've been discussing. So prior to 1 March 2021, if you immigrated through the MP336 method and your immigration was on record with the Reserve Bank, then an inheritance after that fact is in fact very simple. And if you've immigrated, you just simply provide, and the executor of the estate from which you're inheriting will just provide a copy of the will, the liquidation and distribution account, perhaps a death certificate, and that amount, if you still had one of the old style blocked accounts, it can be paid in there and remitted immediately to you offshore. Under the new dispensation of the tax immigration, and Robert of our office has been handling a number of these recently, where on that basis, you go through the TCR01, and I think that if you've left and you're no longer a taxpayer, there is a mechanism where SARS will still allow those funds to go and won't necessarily require you to reactivate your tax number. So that can be done. So it's not an impediment to tax immigration in terms of being able to receive an inheritance.
Okay, so probably the most duplicated question today, Anthony, is one around what assets are covered insofar as the exit levy goes. Is it just South African assets? Does it relate to worldwide assets? Does it include local endowments or offshore endowments? What are we paying tax on here once we financially immigrate?
Excellent question. And, I would think the correct answer to that is that if you've got worldwide assets, and notwithstanding my comments earlier when dealing with the TCR01, you are ceasing to be tax resident. So it's all your assets, South African and outside of South Africa, that would need to that fall into that category. So in other words, as long as they're not, they don't comprise property that is owned directly. But in all other instances, investments, shares, and so on, you would pay tax on your local and foreign assets. And then with capital gains tax in those countries that have a capital gains tax regime, which most have, that value on the date you cease to be resident, on the next day, being the day you arrive, becomes your new base cost. So on foreign assets, yes, you're paying capital gains tax, but you're then achieving a step up because you've paid the capital gains tax on the day you land going forward until the actual disposal.
Great, thank you.
Sorry, Darryl, I should just add that gets complicated with properties because, as I said, real estate or properties that you own directly, there's no disposal at the time you cease to be you cease to be resident and undergo tax immigration. When you arrive in your new country, that property will be valued, and so when you ultimately dispose of it, there would be two instances of capital gains tax, because on a situs basis, South Africa would claim capital gains tax on the basis that you've then disposed of. And then in your new country, on a residence basis, they could also claim perhaps the difference between the gain on the date you sold, the proceeds, in other words, and the value, the base cost when you landed in that country. So, but again, the treaties will come into play and you'll never be taxed twice.
Quite a lot of interest in retirement products, Anthony, so perhaps worth a bit of repetition here as well. So some of the questions, I'll fire off a few in a row. Retirement annuities, preservation and pension obviously are being regulated under Reg 28 of the Pension Fund Act. If I immigrate, can I own more offshore assets in my South African retirement annuity? Is one. And how are living annuities treated? Are they treated differently from an immigration point of view to retirement annuities? Or is it still the same 3-year rule that applies going forward?
Yep. So living annuities, if you are already, and I'm dealing with your last question first, if I may, Darryl. Living annuities, if you are already reached retirement age and you've pressed the button and you are now in annuity mode, then I think there's not much you can do. And in fact, a number of people who I observed, what they actually did is if they had a living annuity, they were of retirement age, they would then do two things. Take the maximum 1/3 that is permissible, and then in terms of the annuity, crank it up to the maximum, which I think is 17.5%, and get your capital out or your annuity, but it goes out. It's fully remittable. In the old days, with a purchased annuity, you had to work out the capital element and the income element, and the capital element was blocked. But nowadays, it's a much more simple. And but the other question that was part of your question is that if you're taking out a retirement annuity prior to tax immigration, and I was on a call with a client and his financial advisor the other day. Within the portfolio, the underlying assets of retirement annuities and living annuities, you can choose virtually an entirely offshore portfolio. I believe that's permitted. Again, I'm not an expert in that field, and probably, Darryl, you within your office do have people that work on this on a day-to-day basis. But you can certainly load the underlying portfolio with almost entirely offshore assets.
So that is indeed the case for living annuities. Anthony, you're right. Yes. From my understanding, the question more related to being a tax resident abroad with retirement annuities, would that bring it out of the Regulation 28 net? In other words, can you hold more than the 30% plus 5% in Africa? I don't believe that you can, but perhaps we can look into that.
Yes, that would need someone who is familiar with Reg 28 they'd be more qualified to answer that.
Perfect. How reversible is all of this, Anthony? I mean, obviously, if you just talk about
another good question.
Let's talk about some of the pros and cons, really, high level of financially immigrating. And if I choose to do it, can I reverse it one day? I think particularly about South Africans temporarily abroad. As an example, playing sport perhaps in Japan for a couple of years, who may return to South Africa. What is my consideration? Do I immigrate from a tax perspective? And what happens if I come back to SA one day?
Okay. So, you mentioned leaving for sport or whatever. I mean, there are a number of facets to this particular question. If you are just leaving and from a tax point of view, you regard yourself as being ordinarily resident in South Africa. So on the very first test, which is a subjective test, and you're going for a tour of duty, whether it be to play sport because a club somewhere has signed you up if you're a football or rugby player or whatever, then but you you remain a tax resident. You don't have to go through the tax immigration process. You can, in fact, the income that you earn offshore whilst you're playing for that club offshore, and possibly even your transfer fee if you were paid a biggie, can all be retained offshore. So it's permissible within our exchange control regulations for you to keep those funds offshore. Now, the tax is a good question, and that deals with the expat tax that I mentioned. So if you remain a resident of South Africa, which I believe on those facts, and every situation is different, but on those facts, you would remain resident, then 1010, the exemption in 1010 kicks in, and the first 1.25 million rand of your remuneration or income is exempt, and you would pay tax above that.
Fantastic. Yeah, and in the instance of reversal, is it quite a difficult process?
Yes,
Can it be
thank
reversed?
you, Darryl. Reversal now under the old regime, and that's it's not that old. I mean, it existed right up until 28th of February 2021. If you came back within 5 years, you were regarded, and I hated this term every time it was mentioned, you were regarded as a failed immigrant. And even prior to that, in the days of blocked accounts and where you were allowed settling in allowances, then as a failed immigrant within the 5 years, you had to bring back what you were allowed to take out. Okay. Now, that has changed somewhat under the new regime. The failed immigration issue, because that involved, for exchange control purposes, emigrating and then immigrating. Okay. Under the current dispensation, you would cease being a resident and go through the process that I mentioned. And then if within a period, either things didn't work out or you came to the end of your tour of duty or whatever, you came back, you would certainly then just become almost an immigrant again, and you would start submitting returns from the date that you became resident. And in fact, I've seen in some jurisdictions in relation to those questions that I referred to, did you cease to be a resident? They also, Australia is one country that I know for a fact has a question, did you commence being a resident? And you can put in the date. So you can, to some extent, flip in and out of tax residency. Just got to watch the issues of triggering the deemed disposal of your assets. But it can be done.
All right. Thank you again, Anthony. I think that covers just about most of the topical issues that have come through in the questions. If we haven't covered your questions today, please feel free to contact, most likely the team that you see on the screen in front of you or your team at Anchor. Thank you again for your attendance across the 4 webinars that we've hosted. We look forward to hosting you again in the future. If you haven't got any of the 4 recordings, obviously with today's to follow shortly, please get in contact with us. Stay safe and see you again soon. Thank you.